Brian Gilbertson, Chairman of Pallinghurst Resources, is in the studio. Yeah, Brian, having a look at these financial results of yours for the past year, you're a man in a hurry. And if you consider all the big stuff you've done in the past, if someone comes from the outside and has a look at this and they see a company that's raised a fair amount of money, gone into 5 different platforms, made a number of acquisitions in that time, and lost a lot of money because of the decline in the markets. Looking back on it, perhaps a little more patience might have helped?
Well, I guess if I could choose the timing, I probably would choose it a little bit differently. Having said that, the losses that you are referring to are actually unrealized losses. All of our projects are in development mode. 2 of them are coming into production. The first sales will be in this year, and indeed the third one will start this year as well, but will only build up in the following year. So what you're seeing there is not the kind of impact on revenues that perhaps you are seeing in long-established companies. What you are seeing is that the market prices of development assets have taken a complete pounding. I mean, we referred earlier to the volatility in the market, 6% down yesterday, 3% up today. You don't actually build businesses in our industry, in my industry, with that kind of time horizon. You're taking it to 2-3 year time period. So that's what we have to get right. I have to say to you, if you went out and tried to buy, for example, Gemfields, which is one of our key investments, at today's price, you don't have a hope in Hades of getting it, or of Platinum, which is, I mean, it's in startup mode at the moment.
But wasn't it best? Wasn't it in liquid or nearly going into liquidation?
Yes, it was, because they hadn't raised the money that was needed to complete the mine. As you may recall, at the end of last year, the platinum price tanked, along with a lot of other things. It dropped below $800. Now, below $800, a very substantial part of the established production from people who've spent their capital will be underwater and just wouldn't be there. So, I mean, you just know that cannot persist. And at that point, having done calculations on what we thought the company could earn and the likelihood of coming into production successfully, we decided to put in the funds that was needed to do it. Now, happily, all of that seems to be working out. The mills are turning. We're getting our first concentrate out and so on. But I won't sleep easy, for the balance of this year until I actually know starting up a mine is a very complicated process. Happily, also, since we bought it, I mean, the price has gone back up above $1,100, and notwithstanding all of that, the share price is trading at some ridiculous level of around, 55 or 60 cents. But I just told the management team, don't even look at it. It's actually not important. What you've got to do is start up this mine, and when the cash starts pumping out of it, the market will do what's got to be done. But you actually cannot manage a mining business on the basis of a day-to-day share price. It's ridiculous.
That's a question, because you have been in this industry for virtually your whole career. Now you're looking at things on a longer-term basis, but you are taking bets, and you did take bets last year, particularly, for instance, in the luxury goods area. You mentioned the Emeralds company. You also made a big bet in Faberge, which you also had to write back by 50%. Look, again, and that's really my question, with hindsight, which is always a precise science, would these assets have been available today cheaper, or was it those kind of opportunities, like with Platinum, that you had one bite at the cherry and that was it?
Well, I mean, just to correct you, the Faberge valuation is actually above what we paid for it. Okay.
But you had an impairment of 50%.
Yes. I mean, we had a valuation at the last balance sheet, and
you added more capital.
Then you have to value it for the new balance sheet.
Sure.
How do you value this business? And the way we did this, we have effectively looked at what the value of a basket of luxury goods companies was at the time that we did the last valuation, looked what their share price has done in the meantime, and just took it down in exact proportion to that. I mean, you've got to do that. But in reality, I have to tell you that if someone came and offered to buy out from us the assets that we've acquired at the prices we paid, we wouldn't sell. We just wouldn't sell, because we know we have excellent projects, and I'm very confident over the next 2-3 years they will come into production, they'll be successful, and they'll be worth a great deal of money.
So if one were to then, by your standards, do a valuation of Pallinghurst on the net asset value, you would definitely not go at the 65 cents that you stated in your balance sheet, but more like the dollar that it was a year ago.
Well, I don't think that's a helpful kind of debate for me to be having. I mean, you have to do your accounts. The auditors have got to sign out off on it, and there has to be a valuation.
But if you wouldn't have sold, if you won't sell those assets for what you paid for them, then surely that's it's a logical conclusion that shareholders could take, or potential shareholders.
Well, I mean, they can take from me the confidence I have in the project. However, there's an accounting process that says you have to value the asset, and you can't just say, well, it's because I like it, I believe in 3 years' time it's going to be a great asset. Auditors don't believe that kind of thing. They must look at what shares are trading at, and they then want to mark. And as you know, today with $1, you can buy something that you would have needed $10 to buy a year ago. The market is just great, proud companies, competent management. Great companies like Rio. I will never forget the day that Rio Tinto was hit 40%. Their share price fell 40% in the course of 2 or 3 hours one morning as the BHP bid was withdrawn. Now, that's a company with some of the finest assets, great management team. Assets just can't be replaced, ever. Okay? Our great-grandchildren will still be mining those assets. And just for that kind of volatility to happen, I'm sorry, people running mining ventures just don't operate on that basis.
Brian, on a more specific area, Johan Rupert's update for Richmond in the 3 months to end December, he said he doesn't see any optimism. He's not seeing any, looking ahead, he has no positive visibility in the luxury goods area. How are you reading it with your Faberge and your Emerald being 2 of your platforms? It is now relevant to your business.
Well, I'm nowhere near on the scale of what Johan Rupert is doing in his huge empire. I mean, we are essentially building up the Faberge brand in luxury goods. It will this year. I mean, there's a bit of a question on the timing, simply to try and judge when I was reluctant to launch at the start of this year because the markets were just such terrible turmoil and no one had any kind of view as to where it might fall to. I have a sense that there's a little bit more stability now. I'm not trying to say the market is good, but there have been a number of auctions have taken place of luxury good items where actually the prices have been reasonable, not great, but reasonable. So I mean, we will launch ours at the very upper end of the jewelry towards the end of the year. And I'll be in a much better position to answer your question when we've been operating for a year or so. But look, building a luxury brand is not something that happens overnight. I've referred to the complications of starting up a mine, but at least you have a 4, 5, 6 month program, and then you know there. But a luxury brand takes a bit longer than that. And we're just confident that we have one of the brands which is potentially the world leading luxury brand. And we have a good team in place to do it, and it doesn't matter how long it takes. We'll do that. We'll build it up.
There's a luxury brand auction happening in South Africa next week when the young horses go on sale. If you were to give a bit of advice to the breeders who are putting their livestock on the market, what would you be saying?
No, I really don't want to go there.
Would you say just be realistic and maybe be prepared to take a little less than last year?
I fear I know nothing about that area at all. I don't know what the shortage of horses is, or the quality of the runners, or the supply-demand position.
But you certainly know the western limb of or the western and the eastern limb of the platinum complex. And next to you is Mark Solomon, who's taken a different view on his platinum developments. Perhaps you could give us an indication of how committed you remain to not just platinum, but the other developments that you have there, because there's some pretty sizable ones.
Well, if you're referring only to platinum.
Yes, indeed,
yes.
at this point.
Well,
or PGMs, rather.
Again, I think I've stated my view to you on a different occasion that platinum and the platinum group metals are fundamental in the way that the world economy is run. You can't refine petroleum, you can't make glass, you can't do a whole host of things without the platinum group metal. You certainly can't put a car on the road. And South Africa has 80% of the world's reserves. So if you want to be in platinum, you've got to be in South Africa, and preferably on the western limb, where the bulk of the production has come and where mining is easier and recovery is easier. We spoke just a little earlier about our acquisition of Platinum itself at the end of the end of last year. The overriding priority for my group is getting that mine up into production, and we're giving the management team, the commissioning team, every bit of support we can. I'm very, very proud of them, the way that they've performed so far.